Today's morning markets focuses in on yesterday's US consumer confidence data. So that dropped the most over a 1 month period in the last 4 years. Okay, so what does the consumer confidence index illustrate? So what it illustrates is Americans' assessment of current economic conditions and their outlook for the next 6 months. So really it's a way to gauge US consumer optimism overall. What were the numbers? So the Conference Board reported that its consumer confidence index fell this month to 98.3. So that was down from 105.3 in January. So this was significantly lower than expectations from economists who projected a reading of 103. And you've probably seen the headlines here saying that this was the biggest month-to-month decline since August 2021. But maybe just digging into that reading, why is the low reading come through? So when we dig into the narrative, respondents to the survey expressed concern over inflation, with a significant increase in the mentioning of words of trades and tariffs. So the measure of American short-term expectations for income, business and the job market fell by over 9 points overall. Now, why is this important? So if we look at the US economy itself, consumer spending is 2/3 of the US economy overall. So economic activity, the Consumer Confidence Index, is very closely watched by economists for signs around how the US consumer is feeling. How did asset markets react? We saw a sell-off in US equities. So initially on the data, S&P 500, so the main US equity index, that was off around about 0.7%. On the end of the day, it finished up down 0.5%. Bitcoin dropped below the $90,000 mark. So that's not just on the data yesterday, it was also on the back of last week's hack, and also nervousness that Donald Trump isn't actually sticking to any of his promises in respect of the individual coins available, as he hasn't actually done anything yet. One asset class that did do well were US bonds, so US sovereign bonds. Yields drop, but what does that mean? It means that actually prices went up overall as people flocked to safe haven asset classes. But what's our take on this? So what have we seen? We've seen tariffs on automobiles, semiconductors and pharmaceutical imports. We know that they're looming. At the same time, tens of thousands of federal government workers, mostly on probation, have been fired by Elon Musk's Department of Government Efficiency. Clearly, there is some nervousness creeping into the US consumer's psyche. However, and this is really, really important, this is just one data point. And if we look at other data points, actually a lot of the other data points are pointing to a strong, healthy US economy. That's everything from me. I hope you enjoyed today's morning markets. I look forward to speaking to you soon.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.